my advice is to first try to reduce your expenses. The lower the cost of living is for you, the less you're likely going to have to take out of your retirement accounts every year. And the less that you're taking out of your retirement accounts, the less you're going to have to pay in taxes. So one way you can definitely keep your taxes down is to reduce what you're pulling out of your retirement accounts in order to keep your bracket low. So in 2020, if you're married and filing your taxes jointly, if you can keep your income under $80,250, you won't pay more than 12% in income taxes to the IRS. Now, there's a nice little gem that I always like to share with my clients. So if you're married filing jointly and your income doesn't exceed $80,000, you won't have to pay taxes on long-term capital gains and qualified dividends in the year that you receive them. And this is strictly at the federal level, so states don't follow suit necessarily. But at the federal level, what you pay to the IRS, if your total income is under $80,000, is a 0% tax bracket for long-term capital gains, which also applies to qualified dividends.